Hey there, random internet strangers. It's Random Crypto Guy here with a part two. Uh, got cut off at the end of my last video because I'm too cheap and putting all my money into Bitcoin to purchase any uh, type of fancy schmancy hardware, software, or anything. So here we are, Random Crypto Guy. Hooray! The worst crypto channel on YouTube. Yay! Dun dun dun. All right. Anyway, I got cut off yesterday about the scammer that I was exposing, and so I wanted to go over that. I went and did some a little bit more going over my notes, and then did some improvements on the system that she's using, and I just wanted to share that with you guys today. So let's go ahead and go right to that. And this is it right here. This is the same chart as yesterday. The you couldn't see that the other day, so let's put that in there. This is the Australian dollar versus United States dollar on a H4 chart. That's the chart that she uses. And what we have here, what I did is I just set up my, this is a supply demand zone indicator. It's a little bit more sophisticated than the one I had before. Shows weak support, untested, and gives you some labels of different types of zones uh, that are formed up. And this is the zone we were talking about yesterday, where it was formed probably on this candle here. So it was probably too late to enter. Uh, it depends on how early it was formed, and if the alarm went off, you got an email, or you were around when this formed up. You could have probably taken this small trade right here, but then otherwise you would have had to wait for the candle to return to this level. And you can see that it coincides. This is the fractal lines. These are a little bit more accurate. I like these because they, instead of going to the tip of the shadow of the candle, uh, the needle of the candle, so to speak, these are on the closes of the candle. So this is the close of, let's see, can't get it to, one of them's the weekly and one of them's the daily. This is probably the daily here, and this is probably the weekly here. So it's a pretty strong area of support where when you have two areas, a daily, a weekly, and I also have the monthly up as well. Let me see if I can pull that up. It's not showing up. That's all right. This might be even overlapping between the daily, probably the weekly and the monthly are overlapping, so that's even stronger. So showing some really strong support right here, and then like this demand zone popped up. So what she would have done is waited for this candle right here to come down, and then look to do a limit order at this level. And so let's say she caught it right here on this, and we just let it fly from here, and we used our 2 Heikenaishi rule. That would have got us out here, and that would have been about 56 pips. Not bad, not bad. This is actually a pretty good system. I thought I might actually just steal it and use it for myself. My reversal system is a little more complex, but sometimes the simpler systems are better. Mine had a confluence of about 5 or 6 different items, several different demand zones, support zones, and trend lines, and even some divergence. And if there was enough converging on one area, that was when I took my trade. It was had to be 4 or more of those converging on one area that would indicate a reversal. What that means is a lot of people are looking at that and deciding whether they're going to trade. And although the banks and institutions, they take up the majority of forex, traders still do move this market around a bit, especially when the banks are on the sidelines or all their money is tied up in equities right now. So that's why it's only a $5 trillion market. I say only because when I first started trading Forex in 2008, and I was right at the height of the financial crisis, they were saying it was trading at 8 to 12 trillion dollars. The money, money was fleeing from the equities market, you know, going into what was safer havens like the United States dollar, the Japanese yen, gold. Bitcoin wasn't around back then; it was just an idea, and the volume was crazy, and the movements, the on the euro United States dollar would move sometimes 300 to 400 pips a day, and I was trying to learn how to trade on that. And it was, what was worse is I was learning how to trade grid trading without a stop loss, and so it was insane. I now that I understand the money flows in markets better, uh, I realize what a mistake that was. But I did learn a lot. And from my mentor, my first mentor, some of you might know him, Crazy Mike Parker. Uh, I don't know why I gravitated towards him, mainly because I would learn from Forex Autopilot. That's how I was introduced to trading, and that robot did not use a stop loss. It used a time stop loss of monthly, and how it worked was because it worked well in back testing because they back tested on the euro United States dollar from 2000 to 2007. And if you look at that time frame, that I don't have a chart that goes back that far, but back then we had charts that would go back that far. And back then the uh, the chart just went, if you looked at the monthly chart, it just went up. There was like 1 month where went down, and the rest of the time it just went up. And that's how Mike traded, is that he would just place uh, take orders, a bunch of buy orders, a bunch of sell orders, more buy than sell, and manage his margin. That was when there wasn't any FIFO. You had 500 to 1 leverage. There was all kinds of crazy things. And he would just manage his margin and make sure that, his margin wouldn't go down, and that he would have more up trades than down trades, because the trend had been for the past decade up on the euro versus the United States dollar. So, and the Great British Pound versus the United States dollar. Those were the two items that he traded. I think he traded the yen as well. Um, so that's why he didn't use a stop loss, because he had just assumed that it was always going to be that way. But when 2008 came around, we found out much differently, and I walked right into the sandstorm, and fortunately, I didn't lose a lot of money. I didn't put a lot of money into it. I blew up a couple of demo accounts, and lost a little bit of money, but not a lot. Compared to what other people lose, because I'm kind of squeamish when it comes to losing money. So uh, I was able to, and then I learned to modify and use stops, and took on more mentors, and tried to figure this thing out. And the one thing that always stuck with me, Mike, is that Forex obeys support and resistance. Now, I know there's a lot of no-nonsense Forex guys out there saying, "Oh, that's all nonsense." Yeah, it's not. It's not. When you use the zones, it's not. And that's what this girl uses, is the zones. Um, if you watch Sam Seeden videos, that's when I really started getting profitable. I went online. Yeah, there's a online trading academy. I went to their class. They have a workshop here in the area that I live in, and went to that. And went to, but I wasn't willing to pay the course fees. But I went online and found every uh, video that I could possibly devour of Sam Seedens, because it made so much sense, and it still does. And it's just you have to layer. based upon the different time frames, because everybody's looking at different time frames, particularly at the higher time frames. It is actually makes it easier because there's less time frames to look at. There's less things that can go wrong because everybody's looking at something. And as I've said before, yeah, the traders, they do move the market. Not a lot compared to the banks, but in the institutions and the hedge funds and the corporations, sloshing money around left and right. Uh, but the traders do have about 20 to 30%, from what my understanding. I've read as little as 1% to as much as 20 to 30%. Uh, I'm probably somewhere in the middle, and then depending upon how much money is getting washed back and forth between the institutions and the corporations and everything is going to determine how much power the traders have, because the traders volume is pretty steady compared to the uh, the bank's volume. But once the banks start coming in again, and the hedge funds and corporations and everything, I think a lot of this got locked up with uh, the trade wars. So a lot of money's locked up into the same country, so not a lot of people are swapping currencies because of the tariffs and the trade wars. I think that that's actually put a damper, and that's one of the reasons why Forex has been such a dead market. And like I said, they've only been there. It was 8 to 12 trillion when I first came on, and now they're saying 5 trillion. So that tells me that they do have some type of tabs on the volume that happens in here. And wanted to talk a little bit about the EVZ. I did a little bit more studying on the VIX, and apparently that's just the volume of the basket of euro currencies. That includes the Great British Pound and the Kronas and all that versus the United States dollar. So they look at that. So it doesn't take into account a lot of the Pacific Rim currencies. Because what I noticed when the EVZ was down, that the Pacific Rim currencies would still trend, whereas the Great British Pound, United States dollar, uh, the euro, not so much. Those pairs did not trend, and so uh, I've taken that into consideration. And when I make my money in crypto, which I'm in a long-term strategy there from 12 to 24 months, and I'll be looking to pull some of that out and take it back to day trading. But I'm going to start paper trading this again, and I'm probably going to use this system along with the no nonsense forex system. Uh, this is a little bit easier. I found myself getting a little bit confused with my own system with the 5 confluences, where instead of just using 2 or 3 confluences. So uh, I'm looking forward to that, and I'll be looking to start giving out signals, maybe even adding my stops and take profits and such, so I have more time. Oh, and another thing with uh, with the no nonsense forex method, he talks about the 28 pairs. So does this girl here. I can't remember her name or anything, but I just wanted to reveal her system. And she uses the 28 pairs, and she used the no nonsense name, and she even had the chess pieces, not the same ones. She had a king that was still standing instead of the pawn, but it was obviously a knockoff, ripoff to try to bring people in that maybe have been struggling with no nonsense forex. So, where was I going with that? Oh, the extra pairs. I found that the Singapore dollar could be added to the list. I think VP and no nonsense only approved of the United States dollar versus the Singapore dollar, but I found that all the Singapore dollar. I actually had one of my best trades was with the Singapore dollar, United States dollar, many years ago when I was trying a different daily system uh, that didn't work out so well, but that was one of my best trades, and so it was well over 1,000 pips. Um, and it was when Singapore dollar just tanked for some ungodly reason, and I caught it with 3 pips of drawdown all the way to the bottom. It was crazy, and so. But this is so you can add the Singapore dollar in with that, so that'll give you 8 more pairs to trade. So that gives you from 28 to 36 pairs.